So how does a company go from being a pretty niche automaker to a global force in just 4 years? Well, in this explainer, we're going to break down exactly how Tesla built the machine for its massive global ambitions. And we're going to do it by looking at the story they told their very own shareholders between 2013 and 2016.
Okay, so to really get a sense of just how steep this climb was, you have to start right here. Back in 2013, Tesla delivered just under 22,500 cars. Now, don't get me wrong, they had a hit product on their hands for sure, but in the grand scheme of the auto industry, they were still a pretty small, emerging player.
But their ambition? Oh, it was aiming way, way higher. Just 3 years later, the goal was to deliver up to 90,000 vehicles. That's a nearly 400% increase. So the big question is, how on earth did they plan to build the massive, complex machine to make that incredible leap happen? All right, let's find out.
All right, let's dive into this. In 2013, Tesla really had to prove it could succeed, where, so many others had failed. And they weren't just selling a car, they were selling a completely new kind of experience. And the way the market reacted, well, it was absolutely stunning.
I mean, the numbers from their 2013 shareholder letter, they paint a really clear picture. They hit their delivery targets, the Model S was actually outselling its competitors in North America, and, this is crucial, they were making real money on each car they sold, with a gross margin hitting 25%. And, as if that wasn't enough, they also built a coast-to-coast supercharger network, which, solved one of the biggest hurdles for EV adoption right out of the gate.
But it wasn't just about the financial metrics or the charging network. The really crucial point here was that the people who actually bought the car loved it. I mean, a 99 out of 100 customer satisfaction score from Consumer Reports? That's almost unheard of. It was a huge sign that they had created something truly special.
Okay, a quick little side note here. As we go through these letters, you're going to see two sets of numbers, GAAP and non-GAAP. It's a small detail, but it's important. So GAAP is the official standardized accounting. But for a company like Tesla that was spending a ton on future growth, non-GAAP was their way of telling investors, hey look, past all the complex accounting for stuff like leases and stock compensation, focus on this number to see how the core business, building and selling cars, is actually doing right now. So the formula was there, right? They had a hit product that people absolutely loved and, importantly, that was profitable to build. But the whole question was starting to shift. It wasn't about making one great car anymore. No, it was about building a massive global company. And that was going to require a whole different level of investment. And to grow, Tesla had to spend. And I mean spend a lot. 2014 was all about laying the foundation for a huge increase in scale. And it all started with the single most expensive and critical part of an electric car, the battery. So they made this incredibly audacious bet called the Gigafactory. The plan was to build one single factory that would produce more lithium-ion batteries than the entire world was making just a few years before. The goal was to control their own destiny and really drive down costs. But man, it was going to require a staggering amount of money over the next few years.
But even as they were spending billions on this giant factory out in the desert, they didn't stop innovating on the cars themselves. Not at all. They introduced the dual-motor all-wheel drive Model S. You might remember it as the D. And they launched the very first version of autopilot hardware, which really laid the groundwork for a future of assisted driving. And they were doing all of this while trying to accelerate the development of their next big vehicle, the Model X.
So all this ambition, all this new tech, it came with just immense pressure to deliver. I mean, after a big jump in 2014, their goal for 2015 was even more aggressive, 55,000 cars. That's a staggering 70% increase. The machine they were building was being asked to run faster than it ever had before.
Which brings us to 2015. And this was the year that reality really started to set in. Trying to juggle the launch of a brand new, super complex vehicle while ramping up production of an existing one and expanding globally all at the same time? Yeah, that turned out to be incredibly difficult.
Now, what's really interesting here is just how well the Model S was still doing. I mean, check this out. In the United States, the entire market for large luxury sedans was actually shrinking a little bit. But Model S sales, they just exploded, growing over 50%. It rocketed to the #1 spot, outselling the Mercedes-Benz S-Class, the BMW 7 Series, literally every single competitor. But That incredible success with the Model S was being overshadowed by some major challenges. The brand new Model X with those super complex falcon wing doors was proving to be a nightmare to build at scale. Production ramped up way slower than anyone expected, and that really hit the bottom line hard, leading to a pretty big net loss in the fourth quarter.
And yet, right in the middle of all these car manufacturing headaches, the company's vision somehow got even bigger. They officially launched Tesla Energy. That's their stationary storage business for homes and utilities. And they announced that production of the Powerwall and the Power Pack would be moving to the Gigafactory.
So, that brings us to 2016. And this was the year that the full, absolutely breathtaking scope of Tesla's ambition really became clear to everyone. The machine they were building, it was for so much more than just making cars.
They made two really critical acquisitions. First, SolarCity, a big solar panel installer, with the goal of basically integrating energy generation right into their ecosystem. And second, Grohmann Engineering, a German company that are experts in factory automation. Now, after the painful production ramp of the Model X, this was a really clear signal. Tesla knew it had to get way better at manufacturing. They had to master the machine that builds the machine if they were going to survive the next phase of growth.
I mean, this quote from their own shareholder letter pretty much says it all. The goal wasn't just to be a car company anymore. It was to be the world's only vertically integrated sustainable energy company, controlling everything from the solar panels on your roof to the battery in your home and the car in your garage.
And you have to understand all of these huge investments, the Gigafactory, the software, the acquisitions in solar and automation, they were all pointing in one direction, all aimed at one single monumental goal, the Model 3.
So, by the end of 2016, you could really see the building blocks finally starting to fall into place. The Gigafactory had started producing its own battery cells. The Grohmann acquisition was there to solve their manufacturing problems. The SolarCity deal created that full energy ecosystem. And finally, prototypes of the Model 3 itself were actually out on the road being tested.
And just look at how the scale of the company had completely transformed. Total revenue for 2016 hit $7 billion. That's a 73% jump from the year before. And while it was still mostly automotive sales, you could see the little seeds of the energy and services businesses starting to sprout.
So by the end of these 4 incredibly critical years, the machine was essentially built. The parts were all assembled, the ambitious goals were set, and the production of the Model 3 was scheduled to begin in 2017. Tesla was now facing its biggest test ever, leaving the entire world to wonder, could this incredible, expensive, and unbelievably complex machine actually deliver on its ultimate promise of an electric car for everyone?